Hi folks, welcome to another episode of the Monkrealtyshow. Today is a first for us with respect to shooting the podcast in our office, and we have a very nice guest with us, Angie Mahtaney from Brigade. Angie, welcome to the show.
Thank you for having me.
Definitely, and thank you for coming down to the office as well. We've done so many episodes where we're just recording on Zoom, and it's very nice to actually have somebody in person that too in our office. So it feels very nice to be doing this.
My pleasure.
For those of our audience listening in from India, I'm sure they are well aware of Brigade Reap, but for those who might be tuning in from elsewhere, how would you maybe introduce Brigade Reap?
Brigade Reap is the Brigade Group's accelerator program, which was started in October of 2016. And the reason it was started is because the leadership at the time believed that there was a need for a platform for startups and technology to really enable the real estate ecosystem. So whether it was to increase sales, reduce costs, increase efficiencies, there was tremendous scope for tech disruption in the space. And that's why it was started for disruption in the broader industry. In the 6.5 years we've been in existence, we have mentored 68 early stage Proptech companies. We were the first Proptech accelerator in Asia, the second in the world. So we did this way before it was cool. And, the mission then was to create the Proptech ecosystem. And in our opinion, we take credit for having done that.
Fantastic. I have been in the Proptech space for about a decade now. And I will definitely agree to that statement because in 2016, it was not yet fancy to build or start an accelerator focused only on Proptech, right? So a lot of credit to the leadership team there to have the vision to play such a bold bet. And 68 companies is actually not a joke, right? It's a very good cohort, and Proptech is not as big an industry as fintech or edtech.
That's right.
Where 68 companies probably got started yesterday, right, in fintech.
That's true.
So 68 is a very big number from the PropTech context, so that's very nice to know. We'll talk a lot more about Brigade Reap, but help us understand what was your journey into Brigade Reap? How did you get here?
It was very serendipitous, to be honest. Before this, I was running a apparel manufacturing company for about 11 years. Also co-founded a cold press juice company along the way, and unfortunately had to shut down the apparel manufacturing company during COVID. And post that, I was really doing some soul searching on what I wanted to do next, and it was abundantly clear to me that I wanted to play in the entrepreneurial startup space, particularly in India. And even during my time as CEO in apparel, I was an angel investor throughout the 10 years. Really loved working with startups, this idea of building something. And during that period of soul searching, a friend of mine told me about Reap. And I've always, I've known Nirupa Shankar for many years, and I've always looked up to her and it's been inspired by her. So, the opportunity to play in the startup space under the leadership of someone like Nirupa was really quite intriguing. So it started out as a 6-month gig just to explore, because I really didn't have real estate experience at the time. But it has turned out to be the most rewarding and fun thing I've ever done in my life. So it worked out quite well so far.
Fantastic. Now, it's always very nice to have people with a lot of entrepreneurial experience and passion come into this industry. And it's very nice that you've chosen to do that as well. So let's talk about the accelerator program itself, right? Now let's maybe look at a PropTech company that is building in isolation versus, let's say, a PropTech company that is building within the Brigade, the accelerator. What are the difference? What does a company get access to when they're working within the Reap accelerator ecosystem?
That's a great question. When we sort of did some soul searching on why great founders would come to us, it really comes down to Brigade, right? The infrastructure that we have, the wealth of knowledge that comes from, running this business for 36 years, the network and the reputation and credibility that we've built. So any company, especially early stage, when they're trying to figure out, what problem they're solving, achieving product market fit, it's incredibly important to get insights and on-ground experience from, such a sort of world-class real estate player, right? That's something that we offer that is difficult to find from, let's say, a sector agnostic accelerator or from a VC fund, right? And so everything we do is really revolves around that. But having said that, we've, I think, done a good job of still, leveraging the Brigade ecosystem to its maximum potential, but at the same time still operating at arm's length, right? Because like I said initially, we're doing this for the industry. This is not just an innovation arm for Brigade, right? And so it's important to operate in a distinct manner so that other real estate developers also kind of look to Brigade REAP for, tech innovation and deployment. I think that's largely kind of what they get from us that perhaps is very unique. I think also from what I've seen in the last year is we tend to roll up our sleeves and get very, very operational with the startup, right? It's not just pie in the sky, 30,000 foot view for a startup. It's actually rolling up their sleeves, going out to the market, going out to suppliers. A large part of our program revolves around getting out to stakeholders to understand what the problem, statement and the pain point really is, so that we make sure that the startup is actually solving the pain point. Then the value prop to a customer becomes abundantly clear, and that's when a startup can scale. Right?
Interesting. Okay. With respect to capital, right? And that is something that we look at from so many accelerators, with capital, without capital, what's important, what's not important. What does REAP stand on? Should it be like a funding plus acceleration kind of a model, or should it is it really people who are coming more for the network and all the other points that you said? What is the stance on that?
The way we see it is capital for good founders is abundantly available, so that we don't believe that can be our USP, right? So we took a very, very different stance when we started REAP, and we continue to maintain that stance, that we want to attract founders who really want to build scalable businesses and for them it's about getting the foundations and the fundamentals right? It's not just about capital, it's not just about valuations, it's about building sound businesses. And so we believe that if we want to work with founders who prioritize that, because when you build that, the funding will come, the capital will come, there'll be a line of investors out your door, as opposed to the other way around of getting capital and then after that, trying to build your business. We think it's better sort of getting your fundamentals right. If it means you scale a little bit less rapidly, that's absolutely fine. But because, during times like this, where funds are drying up a little bit, the businesses that are going to do well and will emerge from this are those that can stand on their own 2 feet, have good unit economics, and the path to profitability is very clear. Right? So that's really the focus. I mean, capital they can get from anyone.
Fair enough. It's a very correct point also, that a great founder or a founding team will have the ability to raise capital. Right? I think the current market, notwithstanding, but even now, a lot of the seed rounds and the early rounds are still happening. Right? Why should an entrepreneur choose to build on Proptech?
Because we're seeing that there is ample opportunity for tech disruption in real estate, right? When we started, as per our data, tech spend as a percentage of revenue in real estate was less than 0.5%. Today it's closer to 2%. So we're starting to see a lot more, members of the real estate ecosystem looking to tech to disrupt, to stay ahead of competition. We get out to our customers quite frequently to understand their problem statements and what's keeping them up at night, so that we can find solutions that solve those problems, and also to take some of our startups who are ready to deploy at scale, we take them to our customers, right? So we interact with them a lot, and we're seeing constantly there's a lot more sort of openness and willingness to adopt. There's more willingness to change. And so I think that's the reason we're still continuing to bet heavily on PropTech. Yeah, perhaps it's not going to be as steep as, let's say, a fintech or health tech, but it will be a slightly flatter curve. But we believe the growth is absolutely going to.
Interesting. And what could be a reason for an entrepreneur not to start in PropTech right now?
Great questions. I think a couple of things. Adoption is still slow. We haven't seen it kind of, like I said, hockey stick like other industries, right? So it's a long journey. One has to be very, very patient. And I think this applies to a lot of enterprises, but we in India want everything for free, right? And so you've got to be very patient. You've got to keep banging on the door, right? And wait for your moment to be able to get deployed, right? So I would say it's not for the faint-hearted.
Right.
When one has to be very patient and be willing to wait it out, sort of 5-7 years.
That's true. I think my experience kind of echoes that in many capacities, but the sales cycles are slower. So if the entrepreneur is not willing to play a very long game, even I realize that this is not the market.
Yeah, that's right.
The advantage that I see on the other side is that the relationships that are built, they are typically more long lasting.
Absolutely.
So customers don't churn that quickly, they don't move out that quickly, etc. So the stickiness is a lot higher.
Absolutely.
Although that initial penetration might take a little bit longer.
Absolutely.
So let's talk about trends in PropTech, because you're involved at the very beginning of the entire company building journey for entrepreneurs. You probably have first-hand experience, or like you have like first dibs on the new trends that are coming up in this industry. What are some trends that you're spotting, like with respect to company building within PropTech?
I think there's a couple of things, if we sort of boil it up a little bit, it's about sustainability, right? It's about efficiency, and we're seeing a lot of sort of opportunity in the decision-making space from a data analytics perspective. And everything, most of the startups we see kind of boil up to one of these three buckets, right? Climate tech is absolutely massive. 40% of carbon emissions come from the built world. And if India is going to become net zero by 2070, then real estate is going to have to play, right? And we're seeing that, right, in terms of regulations for public listed startups on sustainability reporting. We're seeing a lot of governments around the country actually give the carrot when real estate developers, deploy various carbon emission reducing initiatives. So we're starting to see it flow through to the private sector, right? And of course, climate tech has been extremely important globally for a while now, right? ESG. So any builder who's trying to cater to a global clientele have to build, sort of climate conscious infrastructure. So climate tech is huge. Whether it's platforms that are trying to help you capture carbon footprint and help you decarbonize, whether it's alternate materials, whether it's IoT metering of utilities. We're seeing massive sort of both on the demand side from customers and as well as on the investment side, as well as the startups that are trying to come in and build solutions. The second one is, like I said, sort of process, efficiency, cost reduction kind of play. So we're seeing a lot of robotics, a lot of SaaS-based tools that help you manage your projects more efficiently and highlight, potential risk factors, delays, things like that. And companies that are deploying sort of IoT, AI, video, even generative AI, to be able to identify inefficiencies in the process, right? And the third is on decision making. I think we're seeing a lot more companies trying to use big data to make better decisions on land acquisition, on where retail brands should put stores, where projects should be developed. So data is a big one as well.
Very interesting. I really like that there's a lot of companies building tough solutions to big problems. especially around sustainable materials, etc. So let's maybe talk about that, because I've been waiting for some kind of innovation to happen there. Not really my area of expertise at all, but really feels like an interesting opportunity. So let's maybe tell us a little bit more about what you're seeing happen in, let's say, the sustainable materials space.
Sure, it's actually a space that we're keenly looking at and really excited about. In our current cohort that's about to start, we're looking at getting a couple of alternate material guys, people who are decarbonizing cement, guys who are using recycled plastic to build paver blocks. Now, we've had companies, not just a Dreep, but, we've seen companies trying to do that. But we're seeing the evolution happen. The companies that we saw years ago versus today are different. The ones today are a lot more mature. They've actually built out a commercially viable product. They have customers. They've got global testing standards kind of met. We haven't seen it come that far yet. And we're really excited about some of the startups we're seeing today of actually showing a fair bit of traction. So we're really hopeful that we'll be able to get these solutions actually deployed at scale, right? It's one thing to just put paver blocks on a few roads here and there, right? But how do you you move the needle only when you can use those materials at scale, right? And we believe we found a couple of really interesting kids from around the country who have found, ways to make it commercially viable. And they're all patented solutions. So it's pretty interesting. We're really hopeful about what we're seeing.
And for these companies to really go to market, are they at that stage yet, where they're speaking to developers and getting purchase orders and stuff like that?
No, absolutely. So a couple of them are at that stage where they're already working with warehousing companies, industrial complexes, as well as developers. Then there are other companies they've built the product, testing's complete, they've done pilots, now they're ready to deploy, right? And so where they're gonna, where we want to add value for startups like that is help you actually build out your GTM strategy, right? Who are the kind of customers you go to, right? Because you want to make sure that you're going after big fish, but at the same time, you're sensible about how you go to market, right? If I want to go to, let's say, a Brigade as my first customer, that may be a slightly tough sell, right? So how do I sort of develop a GTM strategy that's both efficient in getting scale, but at the same time also very practical, right? So those are ways in which we kind of engage. So what we do when they come to us is we take them out to a range of customers. And, whether small, medium, large, we take them to architects, we take them to civil construction companies, and then we understand, basis those meetings and insights, we actually develop together with the startup an effective GTM strategy.
It's a good point that an early stage company should not go to a company as large as Brigade on day zero. But as a founder, the temptation is always to go get, the big whale.
Absolutely.
As quickly as possible. It kind of also mirrors our learning, where when we enter a new geography or a new customer segment, earlier what we used to do was only try to go top down, because everyone wants to buy whatever the market leader is buying.
Yep.
And that becomes the strongest case, but then it's not at all easy selling to the market.
It's not.
It's a 12 to 18 month sales cycle, and you might have to dramatically change your product as well, because what the market leader wants and what the rest of the market wants might not be.
Absolutely.
So selling to the market leader probably gets you a lot of credibility, but you might have to move your product in a direction that the rest of the customers might not really appreciate.
Absolutely.
So even we've kind of tweaked our go to market, having learned essentially the same thing. Let's talk about mistakes, right? What are some mistakes that you see Proptech founders or founders in general make at earlier stages in their company building journey that could be easily avoided?
I think there's 2 or 3 things. One is startup founders tend to build solutions without doing enough validation on what problem they're solving, right? They'll build a solution and then they'll try to force fit a problem into that. And that's dangerous. Those businesses are tough to scale. because you're not really clear on the pain point that you're solving, and you end up becoming a nice to have solution.
Right.
And so I think, and a lot of startup founders will get early traction through their friends, their family, their network, and that can be really dangerous because you get this traction early and you think, oh my God, I'm home, right? I've got my product market fit, but it can be deceptive. When you're trying to go from, let's say, 50 lakhs to 3 crores, that's when you start to really see, oh my God, customers are not biting, right? So I think one is, first be very clear on the problem you're trying to solve. And is it a hair on fire problem or is this a nice to have, right? Number one. Number two, we find a lot of startups building, and then as they'll go out to market and they'll realize, oh, the customer's not biting, and they think it's short because they're short of a feature here, a feature there. And it's every time they go to a customer, they just keep adding features. Very often they're not getting to the root of the issue, right? So I think what we always tell our startup founders is build and sell in parallel. Keep building, keep selling that. See, and there's nothing like data, right? So every time you get a yes, you know exactly kind of what's going right or wrong. I think the third thing is, especially on B2B SaaS, we tend to, startups tend to look at acquisition of new customers. Whereas in our opinion, I think the key metric is expansion within one customer, right? Keep going deep, keep increasing your revenue with them. And I think the last thing is, it's been very easy for startups to get carried away by this whole sort of valuation and fundraise game. And I think our thesis is that focus on building a sound business and the money will come. Don't get caught up with valuation. Take what you absolutely need. It's okay to go slow at the start. Don't dilute too much. Sort of create a really good foundation so you can kind of rocket fuel your journey, in the years to come. I think those are the key things we've seen startup founders fumble on, and we try to use data and logic to be able to convince them to try and.
But just from the other side, sometimes it gets very frustrating as a Proptech founder where you have clear product market fit, where you have a lot of revenue coming in and you're struggling to raise, let's say, at a 10 million valuation, when your friend from college starts a fintech company, day zero, gets like a 5 million check at a 20 mil free, right?
Yeah,
and this happens all the time. All the time.
Absolutely.
And that kind of makes you question, am I building in the right market, right? So what would you suggest to founders like that?
This sounds philosophical and cliched, but I think the only thing I can say is that everyone's on a different journey. Be very, very clear on yours, right? Be clear on what you're building and how you're going to get there, and be open for that to change, plus minus 5%. But you are on your own journey. You cannot compare yourself to another founder, because if you start taking decisions basis that framework, you will start making the wrong decisions for your business. And I think that's the only thing I can say.
Fair enough. The point about hair on fire problems versus, just good to have solutions. How does a founder validate whether it's really an important problem worth solving? Because especially when you do market research and you're speaking to early customers, etc., right? They might just to be supportive or just to kind of encourage you to build your own company and stuff like that. People end up giving words of support. But how do you know that, this is truly a problem and my solution is a really good solution, but more than that, this is a really, really important problem? How do you validate that?
I think two things, right? First is when you're articulating your value prop, right? And can you quantify it? Can you quantify an increase in sales for a customer? Can you quantify a reduction in cost, right? Or are you just giving really kind of fluffy, qualitative kind of benefits? If that's what it is, you're not solving a problem. Number one. Number two, and most important, is what are your customers doing? Are they paying? If you can, everything you need to know about your product market fit, your customer will tell you. How excited are they about giving you a pilot? How easily do they release a PO? Your customers tell you everything you need to know, and that's why we always say, while you're building, sell. Don't build your MVP, or what we call MVP, minimum billable product. build that and sell it. Don't wait till you have this really fancy, product with bells and whistles, because you've probably overbuilt. And if you're not solving a hair on fire, your MVP stage, at that point, you haven't sunk in as much money, right? And so keep selling, keep getting out to customers. That's the only way you know whether you're actually solving a hair on fire problem.
Fair enough. And just going back to the fundraising and the portion, right? How is the market right now? So 2022 was a tough year to raise money. 2023 so far, at least from outside, kind of seems very similar. What are your thoughts on that? Do you agree? Do you feel it?
Yeah, I think funding has tightened, but good founders will still have a line out the door, in my opinion. What do I mean by good founders? Again, those who are solving hair on fire problems. They have a unique solution. The team is passionate and has some sort of domain experience to be able to solve the problem. Like I said, fundamentally sound businesses. VCs today are looking at companies that can be profitable, where there is a very clear path to profitability. I think for those guys, I make it sound easy to build that, but it's not. I recognize that. But for those guys, the funding is still there. Yes, valuations have dried up a little bit. We make investments as well. We cut early stage checks in founders, and the valuations we would get, I'd say 12 months ago versus today, are quite different. But I think it was a much needed correction. I would say about 25-30% is what we're seeing so far. Yeah, it's not bad. It's a healthy correction that I think was much needed. I think the prices at which money was being given to me was just not logical. And so I think this correction is good for the ecosystem. It doesn't feel like that for founders, but it's good for the ecosystem.
And with respect to the actual fundraising journey process itself, what are some things that you would recommend to founders to do? Because you must be hearing so many pitches, right? On the other side. What do you feel are some mistakes that founders do when pitching, and what are some suggestions that you would have for founders when they are raising money right now?
I think, again, founders are still getting carried away with valuations. I think it's got to be fairly simple, right? One is, of course, how much do you really need, right? And give yourself an 18-month runway, because in this kind of market, it's going to take you 6 to 12 months to fundraise, and you don't want to fundraise and then again in 3 months be back at it, right? So an 18-month runway when you're fundraising is, I think, critical. Number one. Number two is that don't look at valuations or, my friend raised at this price or other companies have raised at this price. Look at how much you need and how much you can dilute, right? If you project yourself out all the way to Series B, right, and you know how much you can dilute in seed, in pre-Series A, in Series A, Series B, make sure that, you still have 50% as co-founders or founders at Series A. You know how much you can dilute, right? And so that's how you justify your valuation, right? And of course, it can't be completely out of whack. You look at industry metrics to do sanity checks. But that's, I think, getting your valuation right and not being foolish about it is important. Number one. Number two, how you're thinking about your business, the size of the market, and how you're going to capture it. Sometimes we get business plans and we see that founders think they can capture 20% of the market. And we're like, have a dream, sure, but you can't build a business plan based around that, right? So when you're building your business plan, do sanity checks on kind of how aggressive are you trying to be in capturing a certain size of business, right? So I think the numbers need to make sense, but it's tricky because you got to find a balance between being realistic, but then also showing that the size of the problem is big enough, the size of the market is big enough, right? I mean, VCs don't necessarily want to invest in small niche businesses, right? So it's tricky to find that balance, but that balance is important to find. I think, like I said earlier, you got to be solving a hair on fire problem, and as founders, get feedback before you get out to fundraise on that. I think having a moat is important. We see so many marketplace businesses and they all think that they have moats, but anybody can go and start that business tomorrow. So I think be really clear on what your moat is. It can be domain experience, it can be your team, it can be a patent. I think those are the things by and large that get VCs kind of excited. And like I said, today it's unit economics. The path to profitability has to be clear and it has to make sense. I think that's, being very clear about that is important as well.
I don't know. I think for a lot of founders, the challenge itself that is coming in is that we are not used to thinking about profitability.
Absolutely.
So no one till maybe like last year has ever asked me about profitability. As long as I can show like a nice financial plan which has like 300% growth year over year, like no one ever asked about profitability. Only the question has always been around how big is the market, how quickly can we penetrate and things like that. But now there's a lot more pointers on like unit economics, but we're SaaS, like so unit economics is like kind of well understood, but definitely around like how do you cut burn, how do you like deleverage your existing development. So there's quite a lot of conversations around that. So definitely but my feeling is that by the time we figure this out, I think the market will go back to more of a bull market. But I think that'll be a good thing if companies figure out profitability in the meanwhile. I think then the capital can actually be used for growth and not just kind of fixing
funding.
I have funding
losses and burn.
Unnecessary burn.
Exactly.
Some burn is always necessary, but
it is for growth.
For growth. But it's just a question of like, are you able to justify that burn? Is your growth aggressive enough to justify your burn? So just on the topic of in general, like marketplaces and IoT and SaaS and hardware and so many, for people like you and me, like who are kind of deeply inside the industry, it feels like, okay, no, everything that can be built is probably being built, right? But are there any particular areas or opportunities which you feel there's not enough players playing in this opportunity or going behind this space?
I think deep tech like robotics, nanotech, I think is huge scope.
Even within the real estate?
Yeah, absolutely.
Okay.
Absolutely. There is massive scope. There are a lot of people trying, but I don't think we've seen anything yet. I think generative AI, we haven't seen anything yet on what that's going to do for the industry as well. I was looking at a startup the other day that takes video of your process and then using generative AI gives you analytics on process inefficiencies. I mean, that's interesting, right? I think we're just scratching the surface.
Interesting. Okay. Since like ChatGPT came out, like any interesting startups that are doing something for real estate with ChatGPT or like the larger OpenAI ecosystem?
We see companies sort of using generative AI to, of course, create content. And we see most of our startups now doing that. But I think as sole businesses, I think the ones that we're seeing that are interesting are those that are using it to generate building design.
Okay.
Right. So looking to optimize for, let's say, sustainability, actually churning out design. So I think the use case we're seeing right now is largely around content, design, presentation, process efficiencies. We are keenly looking for startups that are kind of doing that. What's challenging is that adoption of these technologies in outside of India is much higher. Like Indians are, and if you don't have scale, the commercials are too expensive. They're not viable, right? If you're going to charge a builder $80,000 to do this video analytics per project, that's not feasible, right? But you understand the startup plight as well. If I have only one builder, then it's not commercially viable, right? It's because you've got to build the data on the back end. Only then is the quality of the analytics strong, right? So for them to spend the money to build that database on the back end is going to cost a lot. And so it's not commercially viable, right? So I think it's sort of chicken or egg here, because if we don't see more and more folks adopting these solutions, we're not going to see solutions kind of come to India at commercially viable prices. They'll continue to stay in the West. Middle East we see is extremely open to adopting tech. Europe as well. So you'll continue to see those solutions emerge there, and you won't see them as much here. So I think the industry as a whole has got to be a little bit more open to it. I think one of the things we're seeing is data security is a big thing, right? a lot of customers are saying, look, is my data secure? Is it safe, right? And until you kind of, create infrastructure and give it real assurances around that, again, that's a serious sort of inhibitor in being able to deploy some of these solutions.
And I think that's a fair point as well, because India, if you're building a business for the Indian market, the challenge really is getting customers to pay enough. And what kind of ends up happening as an ecosystem is that all startups, even the really innovative ones, being built from India, just use India as a POC market, just to get early customers, some kind of credibility, traction, tweak the product. But then, no, I'm not going to do a go-to-market here. I'm going to do it in GCC or Europe.
Exactly.
And as an entrepreneur on the other side, that's the exact choice we are making.
Yeah.
And it makes a lot of sense why other startups would make the same choice. But then, as a nation and as an economy and as a larger ecosystem, this is going to be a huge miss for us. Like, we are going to build the technology and we're going to make sure the rest of the world benefits from it without, the nation actually benefiting.
Absolutely.
Benefiting from it.
We're seeing the same thing. Some of our startups have, they've started marketing aggressively to customers outside of India, and they're doing really well. So we're seeing that as well. I'm hopeful that it'll change. It hasn't changed yet. I think adoption outside of India is a lot faster. So, but I'm hopeful. It has to change. I mean, it's a slow journey, unfortunately. But I find it hard to believe that it's not going to change.
Fair enough. That's the hope that all of us have.
Yeah.
We're kind of running out of time, but maybe as a closing thought, even I've been in the Proptech industry for a while, but I have very visibly noticed a shift in the last couple of years from the broader investor ecosystem, where I think Brigade has set up a new fund now. Gruha's Proptech, they've set up a fund. Our own backers at Aurum, they've kind of gone very aggressively after this space. From your lens, right? What do you feel is happening? As in, why do you sense that there is maybe an inflection point as in the last couple of years? And these are all big commitments being made, right? None of these are 5 million, 10 million seat funds. They're all $100 million plus, kind of bets that people are making. So what do you feel is happening now, and what should we expect over the next couple of years?
I think there is, like I said, the adoption of tech in real estate is growing. And I think that's what's causing this increase in sort of players in the space, right? And we're really pleased about it because, to a certain stage, the more players, the more awareness, right? Both for the startups as well as for customers. So we think it's great for more players to come and we look at each other, I think, more as collaborators than competitors. So I think it comes down to all of us believe that there is an opportunity there, right? Tech, real estate is an industry that, is a traditional business in India, but is ripe for tremendous disruption. I think the writing's on the wall, right? And so I think all of us are sort of in it to kind of, capture that opportunity.
Fantastic. More money, less problems. Fantastic, Angie. Thank you so much for coming down to our office today, spending time. Irrespective of what the audience are taking away, I have an entire notes section filled with takeaways from whatever you just shared with us. Thank you so much.
Absolutely. Thank you so much for giving me the opportunity.
Fantastic.